and introduce our presenters today. So for the First Nations Financial Management Board, I've got Scott Monroe here. Scott is a chartered professional accountant and a certified Aboriginal financial manager. Scott has been with the FMB for nearly 5 years in the role of Director of Standards and Certification. Scott was the lead in the development of FMB's local revenue standards and the establishment of FMB's new standard setting process. Scott is Cascadene from the Yukon. Lee Fulla is a chartered professional accountant and has been with the FMB for 3 years and is now the Senior Manager of Standards and Certification. In his time at the FMB, Lee has worked with dozens of First Nations across Canada who are working toward financial performance certification and financial management certification. So with that, I'll turn it over to these guys and, oops.
There we go. Super. Well, thank you very much. I'd like to thank you to our moderator for those kind introductions, and most importantly to the Tulo Center of Indigenous Economics for hosting us today. This is actually the third opportunity we've presented a webinar, and we're looking forward to today's session. I'd like to thank each of you, our participants, for taking the time out of your busy day to attend this webinar. We would certainly like to acknowledge the fact that we are broadcasting this webinar from within the traditional territory of the Kamloops Te Secwépemc, here in beautiful Kamloops, British Columbia. On the next slide, we will see the agenda for today's session. So we'll quickly advance through these, show you what's on tap for today. So we'll start by providing a brief refresher on who the FMB is. We will do a brief recap of the existing financial performance standards and what they exist for. We'll also walk through and explain the various proposed changes to the financial performance standards. This is the primary purpose of today's webinar, so we hope you get lots out of that. We will provide you with an understanding of how the FMB makes changes to our standards. And lastly, we'll explain how you can get involved and have your say on these matters. This webinar has really been designed for FMB's clients and other stakeholders who may be impacted by changes to the FMB standards. So it's going to be especially relevant to those clients who are seeking a financial performance certificate from the FMB in the near future. Like our moderator said, questions can be asked at any time by submitting them online. So just use that option and you can type those questions in, and we'll certainly look forward to addressing those towards the end of the session, if not during. We should have time certainly at the end for that. So let's get started. So who is the FMB? We'll just do a quick recap for those that may not be entirely familiar with who we are, because I know we have a wide range of participants today. So we just want to give you a better understanding of a little bit who we are. So we exist as one of 3 fiscal institutions under what's called the First Nations Fiscal Management Act, which is a separate piece of legislation, completely separate from the Indian Act. The First Nations Financial Management Board establishes financial management standards that lead to the principles of sound and transparent practices. We're joined by our sister organization, the First Nations Tax Commission, who seeks to ensure the integrity of First Nations tax systems, and the First Nations Finance Authority, which has been established to enable First Nations to borrow against any secure source of revenue at low rates, often lower than traditional sources of financing. So hopefully that gives you a bit of context of how we fit into the picture. So again, who is the FMB? We're an independent First Nations institution that was created by First Nations for First Nations. One of our primary mandates is to support First Nations as they build strong governance and finance practices. We also support First Nations who wish to access the capital markets through our sister organization, the First Nations Finance Authority. And this access is provided through the Financial Performance Certification. We are Canada's only legislated body that develops and publishes First Nation standards for financial administration and certification. And the FMB currently provides 2 types of certification. The first is the Financial Performance Certificate, and the second is the Financial Management System Certificate. And it's important to keep in mind that our services are entirely optional and they're provided at no cost to First Nations. So who is working with the FMB today? Well, it's pretty exciting. Here's a little breakdown of who we're working with. It starts off with the fact that there's 220 First Nations that have requested to have their name added to what's called the schedule to that piece of legislation, the First Nations Fiscal Management Act. And it's important to note that that's an indicator that those First Nations are requesting or choosing to work with one of the three institutions under the Act. And you do have to be scheduled and have your name appear in that Act to begin working with the FMB. We've issued to date compliance approvals for 118 financial administration laws. So that means there's 118 First Nations across Canada that have enacted a financial administration law that meets the FMB standards, which is pretty exciting. These laws establish the framework for a robust financial management system. The FMB is very proud of the fact that we've issued 99 financial performance certificates to date. Many of these First Nations have used their certificates to become borrowing members of the First Nations Finance Authority. And lastly, 6 First Nations have now achieved Financial Management System certification. This demonstrates that they have implemented their financial administration laws. And in fact, they've brought those laws to life. We're presently observing significant growth in this area, and we anticipate this number to grow substantially in the next 12 to 18 months. We're actually really pleased that the first FMS certificate was issued to a community in Manitoba just last week. And we'll be celebrating with them very soon about that accomplishment. So turning to the next slide, just a slide that highlights the fact that our sister organization, the Finance Authority, very recently issued their 4th debenture, meaning they have issued now almost $400 million in debt, long-term debt at low rates to First Nations across the country. And that's really making a big positive difference as communities are able to achieve their aspirations. As mentioned earlier, the Financial Performance Certificate from the FMB makes a First Nation eligible to become a borrowing member of the FNFA. And that institution was created, as I mentioned, to provide direct access to long-term financing on the global capital markets. And that financing is being used today to build on reserve infrastructure and create economic development. The FMB continues to play an important role in supporting First Nations achieve long-term financial success. This includes setting the standards for financial performance, which we're talking about today. So I guess that brings us to our first live poll. So we're going to open that up here shortly, and you will see some questions. And the responses that you'll be able to choose from are to this question. We want to know if your First Nation is certified by the FMB. The first question or first option is yes, we have a financial performance and/or financial management system certificate. No, but we have a financial administration law. Or 3, we are not currently working with the FMB. Or 4, not sure. So we're going to launch the polling here. So it should be open now. So if you could just take a second and just click on what your appropriate response is. We see some responses coming through. That's great. Thank you. We'll just give a few seconds for people to go up and click their best choice. See about 11, 12 people, but that's great. Oh, they're rolling in now, Lee. That's great.
Excellent to see.
About half of you have voted. If you haven't voted, please make your selection now. And then we'll share those results in a few seconds. 5 more seconds. Last chance. Okay, just over half of you voted, looks like. So it shows us about 40% are saying, yes, we have a financial performance or a financial management system certificate. Well, that's great. And next largest group is our individuals that have that law, the FAL, or the Financial Administration Law in place. And some of you aren't currently working with the FMB, which is fine. And I realize there are some people attending this webinar that are not First Nations. You might be an auditor or advisor or someone that's supporting a First Nation, so that's good. Well, thank you for taking the time to vote on that poll. We'll have another question later on in the webinar. So let's do a quick recap of what the existing financial performance standards are. So here's an overview of our collection of standards. There's actually 4 distinct sets of standards. The first one is the Financial Administration Law Standards. The second is the Financial Management System Standards. The third is the Financial Performance Standards. And fourthly, the Local Revenue Financial Reporting Standards. And today, of course, we're focusing on the financial performance standards themselves. So what are these standards? Well, these standards are used to assess the historical financial performance of a First Nation over a 5-year period. It's a point-in-time evaluation and measurement. This assessment is based on 7 financial performance ratios. We calculate these ratios using audited financial information. If these standards are met, it allows the FMB to issue a financial performance certificate to the First Nation. And as mentioned already, the purpose of this certificate is to make the First Nation eligible to become a borrowing member of the FNFA. 2 other important notes. Our evaluation is always at a recent March 31st year end. This allows us to make use of annual financial statements of the First Nation. And secondly, it's important to remember that a financial administration law is a key requirement to obtain financial performance certification. So how is financial performance measured today? Here's a quick summary of the 7 current financial performance ratios. The first is the fiscal growth ratio. This measures trends in revenue compared to trends in expenses over the 5-year period. There's the liquidity test ratio. That measures the ability to meet short-term operating obligations. There's the core surplus ratio. That measures the ability to generate sufficient annual cash flows to maintain operations. There's the asset maintenance ratio. This measures the ability to maintain a sustainable level of capital investment. There's the net debt ratio. This measures debt in relation to total revenue. And the budget performance ratio. That measures the ability to manage and execute based on budgets. And lastly, the tax collection ratio. This measures the efficiency and stability in collecting on property taxes when a local revenue system has been put in place by the First Nation. So in summary, these are the 7 financial ratios that make up our standards today. So why are we changing? You might be wondering why we believe some changes need to be made to our standards. Well, before we outline the actual changes, I think it's important to ask that very question. The fact is the financial performance standards have not undergone any significant update in over 8 years. Much has changed during that time. The FMB has issued 99 financial performance certificates during that time. We've learned a great deal about First Nations financial performance while doing this. Public sector accounting standards and government financial reporting have evolved since the FMB standards were first established. We're very committed to being responsive and relevant to the needs of First Nations. Some of these changes are a direct response to feedback received from our clients. We also need to make sure these standards support the needs of the other 2 First Nation institutions under the FMA, the Finance Authority and the Tax Commission. So really, the bottom line is that these proposed changes are expected to make the financial performance standards more relevant to First Nations and to better reflect the needs of capital markets. So who will be impacted by these changes? We need to consider that question. Let us be clear that we are not asking First Nations to change anything they are currently doing today. The proposed changes will not impact any previously issued certificates. They remain valid. Any changes that are approved will only impact new certificates that are issued after the effective date of the change. So this means that only new FMB clients or any existing clients who are seeking a new financial performance certificate will likely be working with these new standards. The effective date of these new standards will be determined based on the feedback that we collect and receive during the exposure draft comment period. So how did FMB arrive at the changes being proposed? How did we get here today? Well, the FMB conducted a very comprehensive review of our existing standards in this area. This review drew upon technical knowledge within the capital markets. The FMB considered methods used by credit rating agencies when looking at government debt. We've drawn upon our knowledge of past and upcoming changes to accounting standards. We've drawn upon feedback from First Nations, our clients. We have accumulated a large amount of first-hand experience in this area. And lastly, it's good to point out that we've actually done some very rigorous testing of these changes on a sample basis to see what effect these changes might have. So what changes are being proposed? Let's get to the details here, you're probably saying. Let's find out what's going to change. So Today, if you opened up our standards, like I said, you would see that we have 7 financial performance ratios. The proposal will reduce this to only 6. Here on the next slide is a high-level summary of the proposed changes. The highlights include the elimination of both the liquidity test ratio and the budget performance ratio. A new interest coverage ratio will be introduced. Other ratios will be modified or replaced. So now I'd like to hand over the remainder of the presentation to my colleague Lee, who will walk us through these changes in more detail. So over to you, Lee.
Great. Thank you so much, Scott. Thank you for listening today. I'm very happy to be here and have an opportunity to present these changes for comment. We're really excited to get feedback from all of you. So let's have a more in-depth look at what our current standards are and how we're proposing to change them. It should be noted as well, the actual calculation of all of our current ratios can be found in the current financial performance standards on our website. And the exposure draft document will take you through a more detailed review of these changes. So the first ratio we're going to have a look at is the fiscal growth ratio. Currently, the fiscal growth ratio measures the changes in revenues over the period, the 5-year period of the review, compared to the changes in expenses over the period. Our proposed modification is to instead just measure the change in total revenues throughout the period. And you'll see currently in our standards, there's some crossover, and what we're aiming to do with these changes is to prevent any redundancy. So you'll see that we'll be looking at expenses in the context of one of the other ratios.
That's great. And so the key change I hear in this area, I heard, Lee, was that we're moving towards a top-line measure of revenue growth over 5 years, which is a little simpler.
Yes, quite right, Scott. Secondly, we're looking at the liquidity test ratio, and as Scott alluded to, we are proposing ratio. So right now, the liquidity test ratio measures current assets against current liabilities. The result of this calculation is represented as a percentage of revenue. So what we're proposing again is to eliminate this ratio. This ratio has been a major barrier to a number of First Nations with otherwise strong financial results, which happen to have short-term debt or demand financing. The removal of this ratio will enable these First Nations to access the First Nations Finance Authority to refinance those short-term loans and kind of get out of that liquidity crunch.
I think this measure also helps align our standards with financial performance measures that are used under public sector accounting standards as well. We'll talk about that as well as we go.
Absolutely. Next, we're looking at the core surplus ratio. So currently our core surplus ratio measures the annual surplus or deficit of a First Nation and then adjusts it for a number of items and measures it against revenue. We're proposing to actually simplify this ratio and replace it with an operating margin ratio, which will measure surplus or deficit as a portion of revenue. And this will remove some of that redundancy with the other ratios. This ratio will be calculated on an average over 5 years, recognizing that a First Nation may have surpluses in some years and deficits in others. So this will no longer be a weighted approach. We'd like to average it over the 5-year period to really smooth out those surpluses and deficits.
That's right. So I think another example of just trying to simplify some of the measures that maybe we've used in the past. So it's a little less complicated a measure than perhaps what the previous one was.
Great. Next is the asset maintenance ratio. We're proposing to modify this ratio. Currently, the asset maintenance ratio compares capital asset purchases as well as repairs and maintenance expenditures against depreciation or amortization expense. The proposed modification to this ratio, it actually just relates to the required threshold for achieving the ratio. The change is in response to the fact that significant capital expenditures may happen in one period, followed by periods of reduced spending. That's pretty natural for how larger projects or infrastructure occurs. The overall threshold remains at 100% over the 5 years, but we're recommending to remove the requirement that spending exceeds depreciation in 3 of the 5 years.
And I think, again, this is an example of trying to be responsive to the needs of First Nations. We feel that this change reflects the reality that the amount and timing of capital funding is often unpredictable and in fact, out of the control of many First Nations.
Absolutely. Next, we have our net debt ratio. So currently, the net debt ratio measures financial assets against liabilities as a percentage of revenue. Also, there's a second part of this ratio that's activated when a First Nation does not meet the required threshold of the first test. The second part of this ratio assesses interest coverage. What we're proposing is that the 2 pieces of the net debt ratio be actually separated. The part of this ratio that considers interest will be split off and become its own ratio. The formula used to assess net debt will remain the same, but the threshold will be adjusted to better reflect the performance of our clients, which is actually lower net debt. In the results that we've seen from our clients, they're actually coming well below our threshold in almost all cases. So we think that having the interest coverage as a separate ratio will give us a better financial picture.
Absolutely. So again, I think this is again just drawing upon the experience that we've acquired over the last several years. So what I heard is that really this boils down to it's going to be a lower threshold for the net debt ratio and a new separate interest coverage ratio.
Absolutely. So as alluded to in our last slide, we are proposing a new interest coverage ratio that's basically born out of the second part of the net debt ratio. So currently interest coverage is only measured as part of the net debt ratio and only when that net debt ratio, the first part of the test, isn't being met. We're proposing that new interest expense ratio be created, and this will measure interest expense as a percentage of total revenue, which will align more closely with ratios used by rating agencies.
That's great. So this, as Lee, as you mentioned, this has been a secondary ratio that has rarely been used under our current standards, and it now becomes much more prominent, I guess, in our new standards.
Absolutely. Looking at the budget performance ratio, currently budget performance ratio measures variance between budget and actual results. What we're proposing is actually to eliminate the budget performance ratio. And I expect that that will make some of our clients very happy. Budget effectiveness, in our opinion, is better evaluated in the context of a financial management system review. It doesn't necessarily indicate budget performance, whether you happen to have an unbudgeted revenue or expenditure occur during the year. Many First Nations are not reporting consolidated budgets on a GAAP basis. So currently, with the way our standards are now, we're regularly calculating a normalization to adjust for unpredictable cash flows from sources such as INAC and other funders.
Yeah, that's right. I think this is an important change. This had certainly we've been deliberating over whether we do this change, but I think it does recognize the reality, as you said, Lee, that many First Nations are still building what could be phrased as a strong budget reporting process, and that many large cash flows, in fact, are very unpredictable year to year. So I think in recognition of those 2 factors, it's a very difficult a measure to be, I guess, requiring a First Nation to demonstrate at this stage. It doesn't mean that the FMB doesn't think budgeting is important. We absolutely do. And when you look at our financial management system standards, you'll see that importance is not lost. It's a very fundamental part of a strong financial management system, and it's certainly one that the FMB would evaluate in the context of its other certification, the financial management system certification.
Yes, thank you. Lastly, we'll look at the property tax collection ratio as it's currently named. So this ratio measures property tax collected against tax assessed per the expenditure law of the First Nation. So of course, this would only apply to our First Nations clients who are collecting property tax or local revenue. What we're proposing to do is to change the name to the local revenue collection ratio, which will more accurately reflect the types of revenues being assessed, which of course in some cases expands beyond just property tax to things like property transfer tax and development cost charges, things of that nature. The ratio will focus more on the most recent year instead of an average of 5 years. This will reflect that overall, from our experience, what we've seen is that First Nations are reporting local revenues with more consistency in recent years. And that also comes down to disclosing it separately in a statement of operations or in separate schedules. We're starting to see that separated more often in recent years.
That's right. So really, we feel these changes are not that significant, but we're better aligning our standards with the evolving nature of local revenues under the Fiscal Management Act. And so I think it just better reflects that. And maybe a small plug to any of those that are listening that do have local revenue laws in place. I did allude to the fact that we have those local revenue financial reporting standards that are now in effect as well.
Great plug, Scott. So in summary, what we're proposing is that the liquidity test ratio and budget performance ratios be eliminated. The other ratios will have some minor but definitely important changes, and an interest coverage ratio will be split off from the net debt ratio. What's staying the same is that analysis will remain a point-in-time assessment and will still be based on 5 years of audited financial statements. As Scott mentioned earlier, there's no impact on financial performance certificates which have already been issued.
And when you get the opportunity to review the documents that we posted on our website, and we'll be providing links to those documents to those that are participating and others, you'll see that there are some other changes to these standards, but they're considered to be non-substantive, meaning that they're meant to be clarification and overall improvements just to wording and the like.
I think that's a very important piece, Scott. And some of the feedback that we received in the past from clients is that our ratios are hard to understand or to calculate. Some of our clients who tried to calculate the ratios themselves and find it quite difficult to understand the process. So hopefully with the clarification to our standards, that'll be an easier process for clients to understand and be able to explain that to other stakeholders. So what is the FMB's process for changing our standards? Well, the FMB has our own set of standard setting guidelines, and those guidelines drive the process behind revisions to all of our sets of standards. There's 3 important principles behind these guidelines, and those are transparency, stakeholder input, and accountability. Those principles are what's brought us here today to make this presentation. So the exposure draft that's being proposed for changes to our FP standards is available for comment until December 15th. We do hope to receive your feedback, and we're very interested in what our stakeholders have to say. So you might be asking, how can I have my say? We would like to hear from you. This webinar is not an FYI, we're changing our standards. Here's what the new ones are. We're asking for comment on what we're proposing, and we do value the input of our stakeholders. It's been a primary driver of shaping our standards up to this point. Please take some time to download the exposure draft. It's not a lengthy document. It's less than 20 pages long. We also have an online survey on our website where you can answer 10 questions about each of our new proposals and submit your feedback. Another option is simply to email Standards and Certification Team, and we can be reached at standards@fnfmb.com. So you can email us your feedback at that address. We're going to have a bit of time for questions at the end of this presentation. I think more than a bit, actually, which I'm hoping we do get some good questions. But if you do have a question following this presentation, feel free to reach out to us and we'll do our best to clarify or answer your question. This next slide shows our exposure draft timeline. So the exposure draft was released on November 1st, 2017, and we have a comment period of 45 days, which ends on December 15th. Any comments received during the comment period will be analyzed and considered in the final draft of the financial performance standards. Our plan currently is to have the financial performance standards available for release in February 2018. The effective date of when these standards will come into force is still being considered and will be announced with the release of the new standards when they're approved by our board of directors. So we have our second live poll here. The question being posed to you is, what do you think of the proposed changes? So option number 1, it's about time. I support the changes the FMB is proposing. Number 2, you can expect to hear from me. I have concerns or feedback to share. Or option number 3, I need more time to understand the changes being proposed. So I understand we have our polling question available here, and the responses are rolling in, which is great to see. Just give our viewers a little bit of time here to log a response. That's great. So why don't we call it there and take a look at the results. So as we can see here, 58% need a little bit more time to understand the changes being proposed, with 42% thinking that it's about time and they're in support of the changes. So great to see. Not really any surprises there from my point of view. I expect that people want to consider the changes a little bit, take a look at that exposure draft document, before they develop an opinion on whether these are the right changes to be made. Any thoughts on that, Scott?
Yeah, I guess I'm not surprised by that either. This is pretty technical stuff, and it's even been a challenge for us, I know, trying to prepare and present this in ways that are clearly understood. At the end of the day, you get down to some pretty nitty-gritty mathematics and calculations and formulas, but hopefully we've covered the essence of what the ratios currently are today, and what the new proposed measures are intended to provide. But that said, it doesn't mean that we've got it right yet. I think it's really important that people take the opportunity to digest the documents that we have provided on our website, which we'll share with those that are participating today. We will make sure you get an email with links to those documents so you can easily access them, so you're not trying to search for them. And it will take a bit of time perhaps to read through that information and consider what they mean. So no, those results are certainly in line with what I was expecting, I guess.
Great.
All right.
So we do have some time for questions. We would definitely love to take this opportunity to answer any questions that you may have at this time. Feel free to type those in and we'll go through them. I think it's really important to, if you do have a question, feel free to ask it. There's probably 28 other people watching the same webinar right now that are having the same questions. So certainly feel free to do that. So starting to see some more questions rolling in, which is great.
So one question by Sharon's asking, are First Nation financial administrations available online? It's an interesting question. They are actually. They're generally published in what's called the First Nations Gazette. So you can always review that website. It's not an FMB website, but that's where those documents and other types of public documents are posted.
Good point there. One point I will make, the First Nation Gazette you can find online at fng.ca. I use it all the time. It's a great resource for anyone who'd like to know if their community has a financial administration law, or to have a read of their First Nations law. We have another question here. For the fiscal growth ratio, how is capital revenue handled for funding received for capital acquisitions, which are not expensed in the year acquired?
Yeah, I guess it's a little hard to answer, but I guess if that capital funding is being recognized as revenue in the financial statements, that would be reflected in our measure of total revenue, and it would be used in that ratio in that regard. I guess if it was being deferred, it would be presumably be showing up as a liability. So it'd be as part of deferred revenue. So it might not fall within that measure, but would fall in other ratios such as our liquidity test ratio today. Absolutely right.
Yes, it would only consider any revenue that's being recognized in the period for that fiscal growth ratio.
Mm-hmm. Question from Jeff, is the presentation available in PDF format? Yeah, we'll certainly publish the slide deck so that can be shared as well. That's a great suggestion. So we'll make sure that's posted on our website and a link to it provided when you afterwards.
Great, thank you very much for those questions. We do have another question here. What's being asked is, what effective date is the FMB considering for the new standards, and how will it impact First Nations applying for certification? That is a fantastic question. I'll take a first cut at that one. As I mentioned during the presentation, we are considering several different implementation dates for the new standards to take effect. So a few options being, I'll go through them in order. The first being essentially when those standards are approved. So once the standards have gone through the consultation process, the exposure draft period has closed, and our proposed standards have gone to our board for approval, option one would be to implement the standards, the new standards at that time. Any new reviews occurring after that date would involve the new financial performance standards.
So theoretically, that could be as early as January or February of 2018.
Quite right. The second option being considered is to have the new standards take effect April 1st of 2018. That would coincide with our fiscal year end here at the FMB and also with the fiscal year end for our clients. So that would have any review occurring after April 1st, 2018, using this new set of standards once finalized. The third option is that the new financial performance standards take effect for the new year of financial statements being issued. So that would mean that if your financial performance review is occurring to include the March 31st, 2018 year, that would be when the new standards take effect. Up until that time, so using your March 31st, 2017 financial statements as the most recent year, they would be reviewed under the old standards. So those are the three options that we're considering at this time, and asking for feedback on from our key stakeholders and our sister organizations to come up with the best solution for what we need the standards to do.
And so watch our website, and there'll be some further communication coming out on that question in the near future once we've collected feedback more broadly.
A great question that we have, were these ratios applied to already certified bands as a test? How did they stack up?
We did a lot of testing, actually. That's a great question. So we did an internal review, and we actually took a very broad sample. I think there were close to 60 or 70 past certification files that we reran the ratios just internally to inform ourselves on what effect they were having. Because what you'll realize when you read the more detailed documents, you'll see that there's thresholds that are being applied. And those thresholds, to some degree, are somewhat arbitrary. And so we looked at a broad range. We ran some scenarios and did some scenario testing to see where or what impact different thresholds and different standards would have on previously certified First Nations. So we took those results into account in arriving at these ratios because we weren't looking to see dramatically different results, let's put it that way. There were some areas we were looking to see different results or different outcomes, and those being favorable outcomes in the interests of First Nations. We're not looking to make them more difficult in any way. These are meant to be useful and relevant. So yes, a good question. Lots of testing was done.
I think just the other point I'll make on that, using the new ratios to assess clients who previously did not meet our financial performance standards, and assessing them using the new standards as well to see what kind of changes we saw in terms of results. So great questions. We have another question, and the question is, do you have ratio calculators or templates? And if so, are they on your website? The answer to that question is no. We don't provide our template for ratio on our website. So we do have the formulas available to look at, but we currently don't have a template. And it's something that's come up before, but certainly there are some pros and cons to having that available.
Yeah, the primary reason is because we like to do that work on behalf of the First Nation. It's a service that we provide, and we're happy to do that. Some of these ratios, as mathematical as you try and make them, are still open to some interpretation. So I think it's important that that these ratios are applied consistently, and we have the means of doing that certainly within our team. It's something we'll look at, though. We've just redone our website, as some of you may have noticed, and we're in the process of launching a client portal side, which will provide more of these documents and more of these tools and templates for download for our clients. So that may be something that we'll make available once that new section of our site is up and running.
Great. Just going back to your point on using judgment with the application of some of these ratios, it's not unusual that there will be certain line items or certain events or results that we may have to propose a normalization to. As you know, a very diverse set of clients with very diverse set of transactions. So from an accounting perspective, we do take a good look at some of those unusual type transactions that sometimes we need to adjust for in the context of our review. So that's a piece that's quite difficult to build into a template, but certainly, as Scott said, we'll take that into consideration.
Here's another question from Melanie. Is there any options for further capacity development lined up with these changes for nations trying to acquire their certifications? The answer is yes, absolutely. We have a capacity development business line, a great team of individuals that are now in various regions across our country who are working hands-on with First Nations. I guess the caveat is to become a capacity development client, it's important that you take the step of implementing or I guess enacting a financial administration law. And you can enact a financial administration law without getting a certificate from the FMB. You can do that on its own. Once you have done that, you're certainly eligible to receive capacity development support from the FMB.
Great. Sorry, just to clarify there, it's not necessary to have a financial performance certificate to work with our capacity development team.
That's right.
Compliance approval of a financial administration law, I think, is the piece that we're looking for.
That's right. Because there are some nations who, for whatever reason, don't meet the financial performance standards at this point in time. And there's often reasons, there's always reasons for that, but that's just the reality, and we realize that. But that doesn't prevent those communities from benefiting from the services the FMB provides, especially in the area of capacity development. So as long as they have done that first important step of enacting that financial administration law and having it approved by the FMB, then yes, certainly they can work with us from a capacity development perspective.
Great. I think we have another question here that kind of refers to one of the points we covered, and that's, can or do First Nations receive a copy of the FMB's ratio worksheets for their First Nation to help them calculate and monitor the ratios going forward? So currently we don't provide a template to recalculate the ratios on a go-forward basis. What First Nations do receive upon us completing a financial performance review either in a situation where they meet our ratios or where they do not yet meet our ratios. We do provide a summary of those results showing each of our ratios and how the First Nation has either met or not met those ratios and how it's calculated. It's important to note that a lot of what we do from a financial performance side of things, we do continue to work with clients who are not yet meeting the financial performance standards. And we do often request, or upon request from a First Nation, we'll rerun those ratios when a new set of financial statements is released. So if a community asks us to perform financial performance certification review, they're not meeting the ratios based on the 2016 financial statements being the last year. When those 2017 financial statements are released, certainly they can ask us to take a new crack at the review or use those 2017 figures. And in some cases, we've been able to go back to a client and say, yes, you're now meeting the financial performance ratios, and we're able to offer a certification.
That's right. So Sharon has asked, does financial performance standards include comprehensive financial statements, including own source revenues and trust funds for First Nations? The answer is yes, but it's important to realize the financial statements that we work with are the First Nation or BAN's financial statements. We don't work with financial statements, for example, that are prepared separately for a trust, if it's out of the First Nation, or the separate financial statements for a business enterprise, for example. So it's always working with the First Nation's financial statements. So if they reflect, as they often do, own source revenue, then yes, we would certainly include that as a measure as part of the total revenue amount.
Absolutely. I think the point there, generally the statements that we will be working with are the ones that are labeled consolidated financial statements, which would have the operation included of entities which are, as Scott mentioned, controlled by the First Nation. We do have some more questions here, which is fantastic. So we'll continue to go through those.
Are the ratios equally weighted, or will one bad ratio mean not certifiable or other? Well, there is some concept of weighting that is applied. At present, though, we don't weight or give more weight to one ratio over another. At the end of the day, each of the relevant ratios do need to be achieved to receive a financial performance certificate, which means, I guess, saying it differently, if you don't achieve one ratio, unfortunately, it means that a certificate is not issued. So we have thought about that. That's certainly a concept that we've considered, but at this time, didn't feel that there was the opportunity to apply that type of approach.
Absolutely. I think the other big piece of the change that we're making to these ratios is to reduce any instance of redundancy between the ratios. So the ratios as presented really do capture a full range of different measures. And that's the position that we've taken, is that all ratios are important. And I think that goes back to part of the reasoning behind proposing to remove the budget ratio. That was something that was causing a problem for some clients previously.
So what will FMB do with the comments received? Will FMB actually make changes to the proposals based on comments received? Well, the answer is we certainly will make use of those comments. We'll actually consider them really, really carefully, especially comments that come from our First Nation clients. Those will weigh very heavily in the proposed changes. So if, for example, we had clients that were strongly concerned with a particular change, we would really take the time to deliberate whether we got that right, and it might indicate we didn't, and we would want to make changes to what's being proposed. We have the ability to issue another, like a re-exposure draft, if we felt that we were really off the mark, or we came across new information that told us we should think about a different option. We're certainly willing to do that. There's a comment, someone has cited one of our certification standards, saying that the First Nation commits to making all reasonable efforts to request and receive from the Board a Financial Management Systems certificate. That is true, but it's only in the context of those First Nations that go on to borrow from the First Nations Finance Authority. So in our standards, and this is something that the Finance Authority would also make you aware of, if you choose to use your financial performance certificate to become a borrowing member and participate in a long-term debenture offering by the Finance Authority, there is the expectation, and it becomes part of a term of your borrowing agreement, that you, within a reasonable time, and today that's considered to be 36 months, come back to the FMB and achieve or apply for a financial management system certification. And that's a whole other body of work that we'll have future webinars on.
Great, thank you. We do have a question here, and it's quite an interesting question. The question is, can these ratios be provided to computer software vendors to include in their general ledger reports so nations and auditors are aware of their significance going forward? That's it's really a suggestion, and I like that a lot. It's certainly something that I think that we could definitely consider going forward to help automate this process.
I think that's a great suggestion, and I think anything that brings more prominence or elevates good measures of financial performance and makes them more visible to not only the accountants and the finance officers, but to leadership and to senior management, I think is really, really positive. So I think that's a great suggestion that we should look into and work towards. We are always looking to reach out to those in the audit profession and others that are working with financial statements to make sure they're aware of these sorts of standards. That's great. So a related question to an earlier one, there's a reference to this 36-month requirement to be certified. The question is, what happens if you can't get certified within the 36 months? Again, I need to be clear that that reference to the 36-month timeline is not anything to do with the financial performance certification. It's only in relation to the financial management system certification, which is the other certification that the FMB offers. And I think it's also really important to, again, recognize that timeline, that commitment that's being made to achieving FMS certification is only for communities that have gone on and borrowed from the Finance Authority, many of whom have. So the question is, what happens if you can't get FMS certified within that 36 months? Well, we would have a discussion, and we would look for new ways, I guess, and better ways to support you as the First Nation to work towards that important goal. There wouldn't be any punitive steps taken in any fashion, because we're here. We're not here as a regulator. We're here as a support organization, and so I think the answer to that question is, we would simply want to better understand where the community is at and what steps, what role the FMB potentially could play in supporting from a capacity perspective.
Great, thanks for that. We have another question here. I'm not sure we'll be able to answer it, but we'll give it a try. What are your thoughts on CMHC lending in relation to the ratios where future subsidies will be received which partially assist with mortgage repayment? Is there any type of adjustment when looking at liabilities?
That's a tough one. I don't know if I have a quick answer to that. I think our ratios may be used by other parties without us knowing about it, which I guess is okay. But we can't really comment on maybe how ratios are being used for other purposes. I guess maybe it's important to keep in mind that the sole purpose, the only purpose of a financial performance certificate under the legislation is to become eligible to borrow from the First Nations Finance Authority. That's the sole legal purpose, I guess, of a certificate. But we understand that, a measure of financial performance is a positive thing, and a financial performance certificate could be seen quite positively by other institutions or other organizations such as CMHC and others.
Great. Just going back to that point on CMHC lending, in terms of an impact on how our ratios will be calculated, it really depends how that's being accounted for. But certainly, if you do have concerns about that, more than happy to take that conversation offline and take a look at the accounting treatment for those subsidies and what impact they might have on our ratios.
So I don't see any other questions lined up here. So, and I know we're just down to the last few minutes, which is great. I'm glad we've been able to take the time here to answer so many good questions. Our next slide just shows our next steps. So please watch for a follow-up email with links to our website and the documents that we've been referring to. Please, once you have that link and it's displayed here, download the exposure draft documents themselves. So there's a document that walks through and explains in plain language, or as plain as we can make it, the changes that we've just outlined, the rationale for the changes. We'll also have a copy of our actual set of standards marked up. We call them red line version. It just means that you can actually see the changes that are being proposed sort of in an underlined fashion, highlighted fashion in the document. So you can actually read the standards and see those changes, see what's been struck out, what's been added. Please do respond to the online survey. And again, a link will be attached in a future email. And of course, at any time, send us questions or comments. Just send a quick email. Please do try and describe the issue that you might be wondering about, so that we can have a good understanding of what you're asking. But please just send that anytime to our standards@fnfmb.com email address. And here's our contact information, myself, Scott, and my colleague Lee. You can reach us anytime. And if you work with others at the FMB, just speak with them as well. That's perfectly fine. We encourage you to do that. So we're at the end of our session here, Lee. I think it's important just again to thank Tulo for hosting us here in their wonderful facility, and really thank each of the participants for taking an hour out of their busy day. So thank you everyone for attending, and we will be in touch soon with more information. Thanks again.